Welcome to Voyage Daily Tech, the most important news personalized for you every day, supported by Voyage.com.
We've got 5 fascinating tech stories lined up for you today. First, we'll explore Google's massive gamble on fusion power, buying energy from a miniature star that doesn't commercially exist yet. Then, we'll examine the tragic Boeing 787 crash and the chilling whistleblower warnings that may have predicted it. After that, we'll cover how the trade war is hitting your Amazon cart, with prices on Chinese goods rising much faster than inflation. Our fourth story looks at why Nvidia insiders cashed out over $1 billion in stock right as the company hit its peak. And we'll wrap up with the cybersecurity arms race as one private firm scores a massive valuation of nearly $5 billion. All right, let's dive right in. The story begins with a decision that caught everyone by surprise. Google just signed a deal to buy a massive amount of power from a technology that doesn't commercially exist yet. Essentially, they are buying energy from a miniature star being built here on Earth. In the first deal of its kind, Google has committed to purchasing 200 megawatts of power from Commonwealth Fusion Systems, or CFS, and MIT Spinoff Racing to build the world's first grid-scale fusion power plant. That's enough electricity to power a small city, all earmarked for Google's energy-hungry data centers. This is where the situation takes a more complex turn. You see, fusion power, the same reaction that fuels the sun, has been the holy grail of clean energy for decades, but no one has successfully built a commercial plant. Even Google's own head of advanced energy, Michael Terrell, admits it, stating, "Yes, there are some serious physics and engineering challenges that we still have to work through to make it commercially viable." So why the massive bet? The answer is the insatiable power demand of artificial intelligence. As AI expands, so does the need for clean, constant energy, and Google is making a long-term play to secure its supply. The CEO of CFS, Bob Mumgard, was brutally honest about the challenge ahead. He said the first plant, set to go live in the early 2030s, will be a lesson in the teething phase of fusion, where they expect to learn how often fusion machines break down and how they can run reliably. To back up the bet, Google isn't just buying the power, it's also pouring more money into CFS, adding to the staggering $1.8 billion the startup raised in 2021. So the real story here isn't just about clean energy. It's about whether Google has quietly secured the power source for the next generation of technology, or if it's just placed one of the most expensive bets in history on a sci-fi dream. From a massive bet on the future of energy to a potential failure in a technology we rely on every day, our next story is a difficult one. A Boeing insider once gave a chilling warning about the 787 Dreamliner. "I believe it's just a matter of time before something big happens. I pray that I am wrong." Now, after an Air India 787 crashed just 30 seconds after takeoff, killing 270 people, his words are echoing across the globe. This tragedy shatters a nearly 15-year streak for the Dreamliner, an aircraft that had carried over 1 billion passengers without a single fatality. But behind its stellar reputation, a darker story has been brewing for years, fueled by explosive allegations from the company's own employees. The late whistleblower, a former quality manager named John Barnett, claimed that to avoid production delays, workers at a Boeing plant deliberately fitted substandard parts taken directly from scrap bins onto planes. He also warned that sharp metal shavings were being left near vital aircraft wiring. The US regulator, the Federal Aviation Administration, actually investigated and confirmed at least 53 non-conforming parts had gone missing in the factory. And the warnings didn't stop there. Another current Boeing engineer, Sam Salapore, recently testified before a Senate committee that production shortcuts could lead to a catastrophic failure. He claimed that tiny gaps in the fuselage on over 1,000 aircraft, the bulk of the entire 787 fleet, could cause premature fatigue failure. Over time, Boeing insists the claims about the plane's structural integrity are inaccurate and that the 787 will maintain its durability for decades, posing no safety concerns. The Dreamliner was a radical bet that paid off, a fuel-efficient marvel that crushed its rival, the gas-guzzling Airbus A380. It redefined air travel, allowing for direct flights between smaller cities, but whistleblowers allege this success created a culture where speed was prioritized over safety. So as investigators analyze the flight recorder, they're not just looking for the cause of a crash. They're trying to determine if this was a tragic, isolated incident for one of the world's safest planes, or the horrifying fulfillment of a prophecy insiders have been warning about for years. Speaking of corporate pressures and their real-world consequences, the impact isn't always this dramatic, but it can hit you directly in the wallet. The trade war, for instance, has just landed squarely in your Amazon cart. A new analysis reveals that prices for goods made in China and sold on Amazon are now rising much faster than overall US inflation, a clear sign that tariffs are hitting American consumers, and the price hikes are not subtle. For example, the report found the price of one popular green pan frying pan more than doubled. A Hamilton Beach electric kettle, once selling for around $50, jumped to over $73. For months, retailers have been trying to absorb these costs. But a new study by analytics firm DataWeave shows the dam has officially broken. The median price for a basket of over 1,400 China-made products on Amazon shot up 2.6% in the first half of the year. That's more than double the 1% inflation rate for other core goods, with the hikes accelerating in categories like home, furniture, and electronics. This presents a fascinating duality. On one side, you have the hard data showing a clear upward trend, while on the other, Amazon has stated that a small number of products does not reflect prices more broadly. This comes after Amazon's CEO, Andy Jassy, said the company was maniacally focused on keeping prices low. The CEO of DataWeave called this the first broad-based price step-up, suggesting sellers are only now beginning to pass on the higher costs. He warns that with additional tariffs already in effect on steel, we could see further price pressure on cookware, kettles, small kitchen appliances, and other household essentials in the next few months. The warning from analysts is clear. This may only be the opening act for how much more expensive your online shopping is about to get. While consumers are feeling the pinch from rising prices, it's a very different story at the top of the tech world. In fact, while Nvidia was busy reclaiming its throne as the most valuable company on the planet, its own insiders were quietly cashing out to the tune of over $1 billion in the last year. But that's not the whole picture. The really telling part is that half of that, a staggering $500 million, was sold off in just the last month, precisely as the stock was hitting record highs and shaking off market jitters. These aren't just a few junior execs taking profits, The sales go all the way to the top. CEO Jensen Huang recently unloaded about $15 million worth of shares, part of a pre-arranged plan to sell up to 6 million shares by the end of the year. This is on top of the more than $700 million in shares he sold last year. So, when we place the public narrative of an unstoppable AI behemoth alongside the private actions of its most senior leaders, the contradiction becomes stark. Just last week, as the stock sales were in full swing, Huang was publicly calling robotics the biggest opportunity for the company after AI. His vision helped propel the chipmaker past giants like Microsoft and Apple, rallying the stock for 5 straight days. According to Verity data, the recent surge in share price above $150 is what triggered this massive stock dump. It leaves the market grappling with a critical uncertainty. As the world bets on Nvidia's future, are its own insiders simply celebrating a massive win, or do they see something on the horizon that the rest of us don't? It's not just public giants like Nvidia seeing these staggering valuations. A similar gold rush is happening in the private sector, especially in the high-stakes world of cybersecurity. To wrap things up, let's look at a single number that says everything about the current moment: $4.8 billion. That's the new valuation of a private Israeli security firm, Cato Networks, after securing a massive $359 million in a single funding round. And if you think that's a one-off bet, consider this. That latest injection pushes their total funding past the $1 billion mark. So what's driving this tidal wave of cash? It's a high-stakes digital arms race. As cyber attacks become more sophisticated, increasingly powered by AI, the fear of complete operational disruption for global companies is skyrocketing. Investors are now placing colossal bets on the companies building the next generation of digital defenses. Cato Networks is at the center of this. Founded in 2015, the company combines network services and security into a single cloud platform known as SASE, or Secure Access Service Edge. This is the tech that helps global players like Carlsberg and Swissport protect their data and respond to incidents before they become catastrophes. This massive new war chest is being deployed to enhance their AI-driven security capabilities and expand their global footprint. What really brings this into focus, though, is the company's potential endgame. a reported 2025 IPO that could create the next public tech giant.
That's it for today on Voyage Daily Tech. Follow, share, and stay tuned for daily updates coming your way tomorrow.